We pretty much have the second quarter earnings season behind us. It's Tuesday, September the 2nd, and this is Markets with Megan. If you like this podcast, please subscribe. Hit that alarm bell. You can share with friends, family, or colleagues. But we're here today to just kind of give you a roundup of what we saw after the 2Q earnings season. And it is very much delayed. It is September now, and second quarter was over at the end of June. But throughout the summer, we got earnings from all of the different sectors. And as we look at earnings season, about 80% of the companies beat the estimates coming into earnings season, and that's very good. The earnings growth on a year-over-year basis actually came in slightly above 10%. It was around 12%, and that's above the 10-year average, which is slightly lower than that 10%. It's also higher than what the estimate was coming into the earnings season, which was also a little bit less than 10%. And now when we look at the details in this earnings season, a couple things to point out. We did notice that recession chatter did quiet down quite a bit. In past earnings season, this has been something companies have really noted. But we saw that the number of companies that cited recession during their earnings calls actually fell almost 90% compared to the first quarter. So companies aren't as concerned about an imminent recession. We saw retailers, which was surprising. Retailers actually do much better than anticipated. And we highlighted, first of all, just Amazon and Walmart. Now, there were a lot of sales incentives throughout the summer that might have, throughout the quarter, which might have helped. But also, we saw some comments from tariffs. Walmart says they basically are going to keep prices low, and they're able to absorb the majority of those tariffs. Now, they did comment towards the end of the quarter that there were some pullback in consumer spending, specifically in that middle and low income shoppers, just really shifting their spending habits. So earnings better than expected there, but still kind of giving that warning flag for the future. As we've seen in the past few quarters, technology has driven this earnings growth. When we look at the infotech sector, it was the second largest contributor. We saw earnings up over 20% on a year-over-year basis. Semiconductors really led that. We did talk about, Nvidia had relatively good earnings. That was always the focus in earnings season. Now, as we move forward into the third and fourth quarter of this year, we think that obviously the recession the recession talk is kind of fading, but we are still getting a lot of the concern around tariffs, especially with some of the headlines we've gotten here at the end of last week. So we're waiting for companies to give us some more indication of what we may look forward to in the third and fourth quarter. What concerns us about the third quarter is that we've started to see earnings revised higher for third quarter, and that's not something you typically see. Typically, earnings are revised lower so that you can beat that bar, but we have seen earnings revised higher for the third quarter, so there's room there that we may get some disappointment. That's all we have for the earnings recap. If you like this podcast, you can always look at our history of them with marketswithmegan.fm. Thank you.